Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and evaluating digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and what we think drove these moves, here are some notable events over the past week. As a reminder before we get started, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Hey guys, I am calling into you live from East Denver. I'm actually at Fuel Day. They're a really cool layer 2 that's building. They haven't quite launched yet, but definitely a fun project to keep an eye on. Thank you to them for letting me use their space to record this. So I'm at East Denver this week. There's a lot of really fun things happening. Definitely a lot of announcements. There's been stuff out from projects like Axelar. Ethereum is potentially announcing that they've got account abstraction added into smart contracts at the end of this week. We've seen a ton of stuff. So definitely stick to Twitter, or if you're thinking of attending, definitely attend. There's a lot of really great projects and interesting things going on here. That said, if you feel like reaching out to me, want to meet up, feel free to slide into my DMs. I'd love to meet some folks while I'm here. But yeah, I'll get into the tokens for you guys this week. So we're going to start with OP/Coinbase. Coinbase announced last week it was going to be launching Base. It's Ethereum layer 2, built using the technology stack developed by Optimism for rollups on Ethereum. So a rewind for you is that Optimism is a rollup on Ethereum, and which is basically a type of layer 2. But they've built a technology stack to allow other people to deploy their layer 2s onto Optimism, or onto Ethereum. So by doing so, people can they can reduce their fees. So the big announcement was that they're going to basically Coinbase has launched their own roll up. It's called Base. And the idea is hopefully they're hoping it'll promote the growth of basically digital asset usage on chain, with Coinbase kind of as the on-ramp for the users and activities. So say somebody signs up for Coinbase, they buy some crypto, and then maybe they want to take it and do some on-chain stuff. Coinbase now kind of offers hey, here's our own L2 with our own projects that are on it, or projects incubated and developed by us, that you can get access to. This, I think it'll be a huge benefit just for, in terms of adoption long term. But so Optimism should also benefit from the launch of this, as they may likely receive some of the fees that Base collects from user payments. OP initially went up 25% on the announcement, but has since retraced and is just up 1% for the week. Meanwhile, Coinbase had moved up about 30 bips week over week. All right, next is Frax, or FXS. So last week, Frax, the decentralized stablecoin issuer, saw a vote passed to move the project stablecoin from partially dollar-backed to fully dollar-backed. So the way that Frax's stablecoin works is that it was partially collateralized. So you do their collateralization ratio would vary, but it was 80 to 90% would be in USDC. So if you wanted to mint any of the Frax stablecoin, you had to commit some USDC, and then also commit some of Frax's token FXS, which is their governance token. And then as people basically contributed that to the FXS that was burned or minted, depending on people burning and minting the Frax FRAX stablecoin. So they've actually decided to move to fully collateralized, which means no more FXS contributions. It's just going to be USDC. So it's probably a smart move considering all the regulatory stuff. A lot of people seem to think that that's kind of what pushed them in that direction. They want to, potentially be more compliant and, not have any issues or barriers to entry with getting their Frax stablecoin, distributed in many different places. So just to give you guys an idea, Frax or FXS, the governance token, is up 18% on the week. All right, last we got Synthetics. So Synthetics, one of the OG DeFi projects, it's a decentralized derivative trading platform. They launched their V3 upgrade on mainnet last week. So this was a very highly anticipated upgrade. The biggest innovation in V3 is they're going to have differentiated debt pools. So basically right now, or previously, they had one unified debt pool. So like if one asset went down quite a bit or there's a lot of volatility in like one particular asset, like stakers were basically exposed to all those assets. So now you can kind of pick and choose like which assets, if you want to just be safe, do ETH. If you want to, earn more yield, be a little more degenerate, you can, choose some more further down the curve assets. So that was a great innovation that they added there. The other one is that the protocol is now going to support multi-collateral staking. So currently, if you want to use the platform, you have to stake SNX in order to create or get SUSD, which is their stable coin, and then you can use it on their derivatives for trading. So that's the primary use though for SNX is like to be this collateral. So the problem is, so it's great that they're going to be offering multi pieces of collateral. So good for volumes, good to bring down the volatility of the assets that are staked. The bigger problem though is that SNX may not have as much utility anymore by getting rid of this feature or by decreasing this feature. So despite this, SNX was up 22% for the week on news of this upgrade. All right, everybody. That's all I have for you this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.